start us off with that Evergrande backer now trying to go private.
Yes, so I mean, ultimately it looks like Chinese estates is trying to sort of also ring fence or contain the fallout from its exposure to Evergrande. It was once the one of the bigger shareholders of China Evergrande Group, although it started paring some of its exposure back in August. And it's saying it could incur losses of almost about 11 billion Hong Kong dollars. So it has cost them.
In terms of this latest development fitting into the broader story, what level of concern are we seeing in the broader market now as we start to see, if not a systemic worry, but certainly this cross-contamination within the property sector?
Absolutely. It does really feel like there's been a kind of change, a more fundamental change for Chinese developers this week because of the kind of really brutal sell-offs that we've seen in Chinese high-yield credit in particular. And of course, you know, shares dropping all over the place, ultimately on the back of Evergrande stress and the broader fallout. As you mentioned, the Fantasia surprise default really has shaken people's confidence, not least because Fantasia itself had promised that it had enough liquidity and it had just made this private bond placement over the weekend before it defaulted on this payment. And I think, you know, the other danger here is that this becomes a self-fulfilling prophecy where, because borrowing costs have risen so high, ultimately a lot of these weaker property finance companies that rely on going to the offshore markets to continue rolling over their debt are no longer able to do that, or no longer able to do that at sustainable levels. And, you know, imminent missed payments become inevitable.
Credit traders were at one point blaming thin volumes for the scale of the meltdown that we saw in the past few days. So what are investors looking ahead with mainland China coming back after Golden Week?
I think that's certainly true. You know, some of the moves that we saw this week, these very wild swings, were accentuated by a lack of liquidity. You know, traders were saying to me there were these sort of big gaps between the asks and the bids, and that was really moving the bonds in quite a dramatic way. I think ultimately folks will be looking to see whether the return of kind of, you know, folks at desks in mainland China does ultimately prove to be a steadying influence, where there's more liquidity in the market that helps kind of steady things, or if in fact it intensifies selling pressure because we have more folks returning who are also looking to divest their exposure to some of the kind of riskiest Chinese bonds.